Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In this help video I'd like to look at a trade. This is an advanced trade that users can use when there's a large degree or there's a trend that's very strong on the large degree direction. It's what I call a DP continuation trade. Now normally our decision points that we place on our charts, they're normally places where the market makes a decision to actually continue. In other words, they're trend reversal areas. But what can also happen is if the market gets to a level where a decision is being made but the decision is to continue, very often the market will make a little wiggle in and around that DP support zone, and that will give us the opportunity to take a trend continuation trade, or in other words a trade in the direction of the original trend. Now I'll take a look at the 15-minute chart in a minute to show that you only do this when the large degree trend is anticipated to continue in one direction. But let's start by looking at the NQ here on this 3-minute chart from the 19th, which is on Friday. Here you can see the market's going down to new lows. If I right mouse click and put the decision point on, you can see that we have potential decision point support. Go forward, the market actually makes a low, and in fact actually this is an automatic DP buy setup, but of course it's not valid for normal standard traders because it's on a red STF, and also, as we'll see in a minute, the large degree trend is down anyway, so you wouldn't be considering this as a buy. Makes another low there, but we're still at decision point support. But what happens after a few more bars is, can you see how the market has rallied, but it hasn't managed to rally hardly at all? In other words, it's just managed to make a little wiggle up here before, as you can see now, the market now continues down to new lows. Now what this does is gives us an opportunity to enable us to place what I call a trend continuation. In other words, rather than looking to buy at this level, we're looking to sell to take advantage as the decline carries on. In other words, the downtrend continues. So how do we place the trades on this? Well, first of all, we look to sell below the low of the lowest bar that made the reversal at the decision point. In other words, the pivot low in around here. So that's a low of this bar here. Our initial protective stop is above any wiggle that happens. In other words, as the market wiggles up before it goes down, we place our initial protective stop above the wiggle high in this case, which would be there. As far as target, well, there isn't any particular target. The only thing we'll do, and I'll show you in a minute, is when the market starts to go with us, as it did here, and starts to get to at least the 100% initial risk level, you just bring your stop to break even. You then use the ATR stop to manage your trade. So let's put the ATR stop on. ATR stop, it goes on. So all you do now is, as the ATR stop then goes beyond the break even level, which it did there, you then simply manage the trade with the ATR stop. The idea being is that this is a trend that's just continuing. There aren't any particular targets. You just know that it's going to carry on in the anticipated direction. And in this particular case, it goes down, 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 and would actually eventually have stopped you out here. So again, this would have been short below that pivot low, initial protective stop above that high, ATR stop down to here, stopped out there, and as you can see, it would have been a nice 5-hour profit. So this is a very good advanced trade, and again, it's only for the advanced traders among you, because to do this DP continuation you must know about the large degree trend direction. What I'm not suggesting, and again I stress this, what I'm not suggesting is that every time the market gets to a DP support zone you basically look to stop and reverse if the market doesn't reverse. In other words, you do a stop and reverse on every failure of a DP reversal. That's not what I'm suggesting, because in this case, if you look at the NQ on the 15-minute chart, here's my 15-minute analysis, you can see that we were coming off a wave 5 high up here very nicely. We then came down, to get rid of that DP because it's not relevant anymore. We then come down to our first DP off our wave 4, which obviously the market went straight through. We then know that the next target is our DP off the entire prior sequence, which would have been off this low. So our DP continuation was in here somewhere, was where my mouse is squiggling around about here. So at this point in time, we knew that the 15-minute chart was saying that the trend was down. In other words, we were going down to this large degree support zone. So first and foremost, you must, and I stress this, must absolutely have an opinion of your larger degree trend direction. So in this case, at the time of our setup, the larger degree trend was down. So what I normally teach is if the large degree trend is down, and you can see this was also confirmed by the STF colour, I'd say to most of my traders to then just avoid buy setups. But what we're looking at here is rather than just avoiding the buy setup at this DP support zone, what you can do is actually take advantage of this to then get in a trend or get into the existing downtrend as the trend continuation. Sorry, the trend continues. So this is why I call this a DP continuation trade, because it allows you to take advantage as the trend continues. Now again, we only look to get into this when there's a small enough wiggle that we come in with a small controlled risk. If there's a huge great big move up here, like there was here, this would probably be too big for your risks. So the only time you look to do this is first and foremost, the large degree trend is in the direction that you're looking to trade. Next, you've got a little wiggle, and that's all that is there, a little wiggle at your DP, and as such you can then use that to enter as the market breaches the high or low of the bar that came in at the DP. Your stop is then at the wiggle high or low if you're going obviously on the long direction. You then use your ATR stop to manage it, but first, as soon as the market gets into profit, in other words, as soon as it gets to perhaps 100% initial risk, you bring your stop to break even a bit quickly as well. Because these trades will either go with you and go with you strongly like this straight away, or if they're not working, they'll reverse pretty quickly and stop you out. So you want to get your stop to break even pretty quickly. So that's an outline of the DP continuation trade, and I wanted to do it on this particular wiggle that unfolded on Friday the 19th, because it's a good example of this particular advanced trade setup.